Hey guys, welcome back to Lofi-Ledger, where I break down the market insights from the perspective of the data scientist. Today we're going to talk about how do you rotate in and out of certain assets, and how do you value assets against each other so that when an asset becomes overvalued, we can sell some of that asset and buy another asset that's undervalued. Because when you look at the market, there's always some asset that's about to go on a bull run. Um, so, for example, gold has been tearing it up recently, even though crypto hasn't been doing anything, right? So, can we spot moments wherein, okay, maybe crypto's not going to do anything for a while? Maybe I have to scale out of crypto and into another asset that's going to do well. So that's what we're going to try to answer in this video. When can we get a view or a picture of the market, and how do we know that we have to buy certain assets or rotate out of certain assets, right? So I created this chart in my website, lofiledger.com. It's a free resource for you guys to use. Um, but basically, what this top graph shows is just basically the price of different asset classes. So we have Bitcoin, ETH, gold, and S&P. So right now we have Bitcoin and gold here on this chart, right? So how do you read this chart? The gold line is basically Bitcoin, and then the pink line is basically gold. So you can see that this is the price of Bitcoin and gold over time, right, on the top chart. And you can see that there are certain moments in time wherein, for example, gold here has been going up, but Bitcoin's also going up. But then also in the recent years, like if we only go back like past 2 years, right, here Bitcoin has been going down and gold is going up, right? So you can see that there are always cases where some assets are have certain momentum while certain assets are losing momentum, right? So how do we identify these things, right? So the bottom chart is basically just dividing the top chart the top charts together. So here we have Bitcoin divided by gold. So if we go look at all data again, this is what it looks like, right? So you can see that when the bottom chart is going up, that means gold is gaining momentum versus gold, right? So Bitcoin is growing faster than gold. But if the bottom chart is going down, that means that Bitcoin is losing uh, money compared to gold, right? So now we have like this single chart that shows whether or not assets are gaining or losing against each other. So just to illustrate this, on this period, for example, you can see this stretch in 2013. Both of them were going down, but Bitcoin went down from $74,000 to to like $300. Oh, so $7,000. So it went down from like $700 to like $300. So it went down like 2x, 2.5x. While gold only fell from 1,200, 1,300 to like 1,000. So it's not even a 2x drop, right? So in that period, you can see that the chart was going down because even though both assets were going down, Bitcoin went down like 2x, but gold didn't even go down 2x, right? So gold was going down less, so the chart was going down. And if gold is going up more than Bitcoin, then this chart will go up. So that's how this chart works. Basically, it shows us the momentum of one asset versus another. Right. So how does this help us? So we can actually write this trend line. So you can see there's like this trend line that we can fit to all the data, and that will be like the average value of the assets. What we can then do is normalize this into to plus one, minus one, or whatever normalization we want. So then now, if we go to normalize, this is what it looks like, right? So now we can see periods wherein gold is Bitcoin versus gold is low, and then you can see periods where Bitcoin versus gold is high. So what does that mean? This basically means that when when this is low, you want to sell your Bitcoin, you want to sell your gold for some Bitcoin because this tends to trend back up. And when this is high, you want to sell your Bitcoin for some gold because Bitcoin versus gold is gonna go down. And to illustrate this, right? So we had this price chart similar to this price chart, and we talked about how this bottom chart is the same as the top chart. It's just divided, showing like the difference. What we can do is change this top chart to the pair. So now this is the gold versus Bitcoin pair that we saw a while ago, right? So if this is going up, Bitcoin is gaining money against gold, and if it's going down, it's losing money against gold, right? So now what we can see in this bottom chart is basically the same as the top chart, except we turned it into a normalized indicator, right? So you can see, for example, down here, um, uh, when it's like -9, right? It's equivalent to the same point up there, wherein Bitcoin was like, yeah, was low. So what happens here, you can see that if you had sold your gold for Bitcoin here, and it kept going up, you can see it would have kept going up versus gold. So you would have won that trade because, Bitcoin was going up against gold. So you would have saved a lot of your money, or you would have made more money. So that's how this indicator works basically. When it's down here, you can expect that you you can sell gold for Bitcoin because Bitcoin will gain money against gold. And when it's up here, you can expect it to go down, um, wherein Bitcoin will start losing money against gold. So that's how you look at this indicator. And like all indicators, it's not perfect. Like, for example, in this peak, for example, right, in this peak, this was this peak. Um, if you had sold all your Bitcoin for gold, it would have it would have gone down for a while, yes, but it would have bounced back up, all the way back up here. So you know, you would have lost this move, right? So just because it goes all the way up doesn't always mean it goes all the way down. So, but it does give us an indication, right? You have to look at other indicators to then calculate whether or not that move is something that you want to happen, if is something that you want to bet on, right? So just because this didn't go all the way down didn't mean that it didn't have the possibility. That was the right moment to consider switching, and if you didn't switch and you considered switching up here, it would have worked out for you, right? So Bitcoin lost a lot of money against gold eventually, right? So if we go back to the price charts just to illustrate that, right? So in the past 2 years, for example, just looking at the most recent data, um, here, for example, up here, Bitcoin was at 120K, and it did drop all the way back down to like 60K, right? While gold kept going up. And since gold kept going up, you can see that this is going down, right? So that's how you read this graph. This gives us a general idea of how pairs are interacting with each other and gives us like an idea of when to trade certain pairs for other pairs. So for example, that's how Bitcoin looks like against gold. We can actually see it against ETH or the S&P, right? So for example, let's switch it to 5 years, just or like yeah, let's switch it to 10 years. Here you can clearly see that there are periods where you can consider switching assets from one to the other. And this illustrates this cleanly because, for example, right now, you might not want to sell your Bitcoin for gold or the S&P, right? It's down here. So you're going to expect Bitcoin to win against the S&P and gold, right? But pretty soon against ETH, it might be reaching its peak, right? So if ETH goes back up here, then it might be time to sell some of your Bitcoin for some ETH, right? Because you're gonna expect Bitcoin to lose money against ETH. So this is how you can spot optimal opportunities in different asset classes and switch into different asset classes, right? So we have this for like ETH and gold. So this is if you own Bitcoin, how do you consider switching to other assets, right? But that's if you own Bitcoin. What if you have the other asset? If you have ETH instead, like for example, right now I have a lot of ETH, but I don't have a lot of Bitcoin because I sold it like near the top. So I have a lot of ETH right now. What am I consider switching it for? It looks like they're all pretty low right now, so I might not consider switching ETH to anything. But if ETH is like up against all these assets, then maybe it's time to consider switching, right? The main theory with this graphs is that assets are oscillators against other assets um, after a certain period of time, right? So if you look at how these graphs work, um, and you just look at it at all. So for example, this is ETH versus gold, right? You can see there are periods wherein it's gonna gain against a certain asset, and then it slowly becomes less and less. Eventually it'll reach like an asymptote wherein there is a fixed fair value against one asset, and then it'll just bounce up and down against that assets, which makes sense because the market is like kind of pricing in a price of that asset over time, and then it's gonna realize, okay, that this asset on average should be worth this much against another asset, assuming that those different assets are still holding the same intrinsic value. So that's basically how this works. Um, the reason why I haven't been buying gold recently is if you look at gold charts, for example, um, right, gold is going down against a lot of these different assets. So, like, if you go look at the normalized values and then just looking at the past 5, 10 years, right, gold is pretty high against a lot of these different values. And if they are oscillators against gold, you're going to expect the price of other assets to start outperforming gold um, over the next few years. Granted, it's not perfect. So, um, just to illustrate this, what we're also seeing right now is the current, right? And current is what you would mostly look at. But, you know, this model, this trend line model that we're looking at, so let me just look at. So, this dotted line that we're looking at, or let's go back to Bitcoin. Yeah, so this dotted line we're looking at is fit to all data, right? But you can imagine that when we were back here in 2017, we didn't have all this forward data. So fitting a line to all that data in the past might have produced a different line. Therefore, our normalized values would have looked different. So we also have a backtested tab here, which shows how the line has evolved over time. So you can see how the line has evolved over time. So even though it's also jagged, um, it's a lot less straight than the other one, but relatively it does follow the same line. And if you look at the normalized values, it is sort of stable. So for example, you can look at right the back tested, these were the tops wherein you should have sold your Bitcoin for gold. And if you look at the raw, it does sorry. If you look at the current, it does look slightly different, right? Because now it's fit differently from historical values, but the peaks are roughly the same way. And that's why this is indicator isn't perfect. So for example, if you look at the back tested, when you were all the way back in 2016, this would have told you to sell all of your Bitcoin for gold um, in 2017, and then Bitcoin continued to outperform gold by a lot, right? So if you look at the price of this, yeah, so it would have told you to sell all your Bitcoin at 700K, but then Bitcoin still continued to go all the way up to 11 $11,000, right? So that's a huge difference, right? So it went up like it still continued to go up almost 2x, right? While gold didn't do anything. So the first flash wasn't it. And Because like when you were here, you would have seen it flash in 2017 because of the back tested values. That wasn't it, but you can see that the latest flash in 2017, that was basically it. Bitcoin started to go down and gold stayed stagnant, so holding Bitcoin was less of a good decision, right? So it's not perfect, right? And not all indicators are going to be perfect, but this narrows it down by a lot, right? So this had just like a 1 year frame where it was signaling to switch your Bitcoin, right? Versus in any given period, right? Like like 90% of the time it's not flashing. So this gives you a window to consider switching assets. And if you look at other indicators on top of that, you can maybe see that okay, this is telling me to switch, but maybe there's another indicator that says that Bitcoin hasn't topped yet. So considering both those indicators, you can then piece together that okay, it's not time yet. That this indicator might still Bitcoin still might top and then I shouldn't switch, but once that topping indicator has flashed and this indicator is also flashing, then maybe switch Bitcoin to another asset, right? So that's basically how you can tell whether or not to switch assets. We also have this comparison tab. So another logical thing to do is you have all these different indicators. So for example, this is Bitcoin against the S&P, against gold, against ETH, right? You have all these different things. What happens if we average all of this, right? We can average all of this and see the average strength of an asset. And that'll just tell us on any given moment which assets are performing well and which assets are performing not that well. So for example, here you can see this asset's pretty crazy, right? It's like oscillating all the time. And that really goes to show that there's money to be made anywhere, right? That there's always gonna be an asset that is outperforming that will underperform, right? And there are assets that are underperforming that will overperform, right? Assuming that the assets fundamentals are still good, right? So look at all of these things, right? Right now, this gives us an idea on at this current moment in time, considering all the assets, what asset is weak right now that has the potential to be strong, and which assets are strong right now, which has the potential to become weak, right? So looking at the most recent values, just look at the past 2 years. This is what it looks like. Gold is really strong right now. And that's no surprise if you look at it, the price of gold. Gold went from $2,000 at 2024, right? 2024 it was at $2,300, and then right now it's at $4,000, right? So it went up like 2x in, right? It went up like 2x in like 2 years, right? So it was like doing 100% every year, almost 100% every year, right? So it went up 2x. That's why gold is really high right now. It's very strong right now because it just came from this massive bull market, right? Assuming that its relationship against other assets and commodities are the same, we can expect other assets and commodities to outperform it, given the strength. And again, it's not perfect, but this is signaling to us that an idea that this is possibly um, overvalued territory. Other assets, for example, like ETH, has been low for a pretty long time. And if you're considering buying an asset, Bitcoin and ETH seem like they're pretty weak against other assets right now. Bitcoin, in particular, if you look at Bitcoin in particular, and just look at all so that we can see its relation to other data, it's kind of mid, right? It has reached values much lower in the past, right? So what does this tell? But it's not perfect, right? Like in the 2019 bear market, it didn't even reach a relative strength against other assets, to the negative, right? So that's not to say that this is definitely the bot like this. That's not to say that this isn't the bottom, right? But it could be, because other times, like in the 2015 bear market and the 2022 bear market, it did reach these lower levels against these other assets. So there's two ways this can play out, right? This could either be the bottom, wherein, relatively, it'll just go all the way back up here. But from these graphs, this kind of doesn't look like the bottom right now. But relatively, it is undervalued compared to other assets. So in the long run, this is probably gonna go up. But like if you look at other indicators, this might still go down all the way back down to the bottom band, right? So that's how I approach looking at these different asset comparisons. If you guys want to look at these graphs and try to see out patterns for yourself, you guys can go to my website, lofi-ledger.com. It's completely free. Um, yeah, so that's how you look at it. But again, just a reminder to not take any single indicator as the absolute thing to make your investment decisions. This gives you an idea of when assets are overvalued and undervalued against other assets. But like what I showed you a while ago, you should still look whether or not, bull markets are over, to decide whether or not that's it. So, because for example, in 2016, this did flash, but the bull market wasn't over. There were other indicators that were suggesting that the bull market wasn't over. So, it wasn't really the time to sell. But over here, there were a lot of those assets did flash that the bull market for Bitcoin is over. So, switching might have been the better move, right? So, that's how I approach this. And if you guys like this, just like and subscribe, and I'll see you guys next time.